If you want to build a large asset base, there are two secrets. One, long time horizon. You buy something to hold it for decades.
Michael Saylor is the CEO and co-founder of MicroStrategy, an American company that provides business intelligence, mobile software, and cloud-based services. In 2020, due to the rapid devaluing of the dollars, the software company decided to adopt a Bitcoin strategy, buying large amounts of the cryptocurrency with cash, debt offerings, and through partnerships. Currently, the company holds over 125,000 Bitcoin, while Michael Saylor personally holds over 17,732 Bitcoin. Because of the large holdings between Michael Saylor and MicroStrategy, many investors are worried that he would one day decide to dump it all and negatively impact the market. In a recent interview with Bitboy Crypto, Michael Saylor lays these fears to rest while also explaining how the company has been buying the asset. Welcome to Savvy Finance. In this video, we examine MicroStrategy's Bitcoin strategy as explained by the company's CEO, co-founder, and respected member of the crypto community. Saylor answers pertinent questions about how and why the company has been buying the digital asset and how long it plans to hold it. The entrepreneur and business executive also gives valid suggestions for investors looking to build a big asset base. Please watch, share, like, and comment. Enjoy the video. One of the most popular queries people have for Michael Saylor on Twitter is how MicroStrategy has been buying Bitcoin. The business executive explains that MicroStrategy is bound by some rules as an institution, unlike retail investors. First, the firm has to ensure that they use an institutional-grade exchange or custodian license to operate in the United States. It also has to ensure such an institution has a stellar reputation and works with reputable auditing firms. According to Saylor, exchanges like Coinbase and Fidelity check these boxes. Listen to Saylor's explanation about how MicroStrategy has been able to buy over 125,000 Bitcoin.
A public company. So if a public company wants to acquire a crypto asset, we need to find a counterparty, like an exchange that we can vet, that we feel secure with. And normally the checklist would be, are they licensed in the United States, right? And the second checklist item would be, are they audited by auditors that our auditors trust? And the third checklist item would be, how do we feel about their security procedures? And then the fourth checklist would be, how do we feel about their business practices and their reputation? So, if you go through all those, you want an institutional grade exchange, an institutional grade custodian, and a jurisdiction. Companies like Coinbase and Fidelity, NYDIG, they would kind of check the box. We wouldn't trade with an offshore entity just because we need someone that's got the appropriate license in the US. And then there tends to be a pretty detailed process of getting comfortable with their back end operations and controls and accounting procedures and the like. So that's how we do it. And that's truthfully how any American institution, big public institution would do it. They would do it through one of those bigger names. And, if you go to my Bitcoin for Corporations conference, we posted on our website, we interviewed 8 kind of institutional grade Bitcoin vendors and we talked to Genesis Trading, we talked to Fidelity, we talked to NYDIG, we talked to Coinbase, right? So I would encourage people to look there if they're interested.
The entrepreneur also answers the billion-dollar question, is MicroStrategy going to dump its Bitcoin anytime soon? Saylor states that MicroStrategy does not plan to divest its Bitcoin holdings anytime soon. In fact, the software company plans to hold on to its Bitcoin for a minimum of 100 years. Saylor explains that MicroStrategy's Bitcoin holdings were purchased in such a way that leaves no permanent damage even if Bitcoin goes to $20,000 or less. The firm also generates enough cash flow to handle its expenses. If that fails, it plans to generate yield or mortgage its digital asset holdings. Here is Michael Saylor's bid on MicroStrategy's time horizon for Bitcoin, as well as some valid suggestions for investors.
Regarding the second question, it's a simple question, right? Our strategy is to acquire and hold Bitcoin.
Right.
So what I think about Bitcoin and what the company thinks about Bitcoin is it's digital property. And what we love about it is it doesn't change. And it has a reasonable expectation of lasting hundreds of years. So our time horizon is 100 years. So effectively, you call it forever, right? The difference between institutions buying assets and people is when a family buys something, they're thinking maybe they'll sell it at some point. But like when the Catholic Church buys something, go look at the Pantheon in Rome. It's been maintained by the church for 2,000 years. When an insurance company buys something, they're thinking I'll hold it for 100 years or hundreds of years. So same with governments, right? So when big institutions buy things, their time horizon is multiple lifetimes. And you're like, how can that work? Well, it can work because they exist just to exist, right? They exist to hold assets.
Yeah.
So that's what we're doing. And you're like, well, how can you not sell anything? Well, the answer is A, we're profitable, we generate cash flow, and B, if we ever wanted money to pay an expense, we would either generate yield with the asset or we would we'd borrow against the asset. We'd either mortgage it or we would generate yield with it. But the goal of an institution is to acquire more assets. At one point, the Catholic Church owned 25% of all the buildings in Spain. We're acquiring property. We're not disposing of the property. And the big advantage, by the way, of a religion is no tax, no property tax, no income tax. That's how they get so rich, among other things.
Church of Scientology, with all their real estate buys all over the world, they own I think it's like half of Miami or something crazy like that.
But being practical here, right? The two big ideas. And this is a big idea. If you look at John Malone, a brilliant businessman, he did all these deals. He did TCI and he owned Discovery and all these cable companies. The whole point of the deals was always to be tax efficient. Like you never want to do anything that generates a big tax bill. So he was very thoughtful about that. You want to defer your capital gain. And so if you want to build a large asset base, there are two secrets. One, long time horizon. You buy something to hold it for decades. I think Warren Buffett's held Coca-Cola stock for 40 years, 50 years, maybe, right? No capital gain if you don't ever sell it. And so long time horizon is one. And then the second is be thoughtful about tax. If you were to buy $1 billion of property in Florida, you'd pay $20 million a year in tax. Okay. It's expensive to carry real estate in Florida. If you're going to do that, maybe you should find another state that doesn't charge you 2% a year, right? Or if with Bitcoin, the beauty of it is I can choose the jurisdiction where I custody it, right? So it's portable property, and then I can hold it forever. And if you have portable property you can hold forever, that's tax efficient property. At least theoretically, it's a lot more tax efficient than any other idea I have. If you buy a company like Apple's got a headquarters in California and they've got employees, and you're going to get tariffs. You're going to get California state tax. You're going to get employment tax. You're going to get corporate income tax. You see, you have domicile. You have a tax load. So MicroStrategy's strategy is long-term, buy, hold, buy some more, keep buying, not going to sell ever.
If you have been worried about Michael Saylor's intentions concerning his firm's Bitcoin holding, he says he plans to hodl for at least 100 years. It is almost certain that other institutions that have the crypto also have similar plans. In addition, many other countries, sovereign funds, institutions, ETF, portfolio managers, and retail investors are going to come on board in 2022 and beyond. Thanks for watching the video. Remember to drop your comments in the comment box below and give this video a thumbs up.